Hi, this is Alan from Alpus Group, and I'm going to talk to you today about why distressed properties could be your best bet. So let's have a look at the market analysis for distressed acquisitions in the UK. What if the distressed mergers and acquisitions opportunities post-COVID were not as good as many thought? The UK market has become interesting for distressed acquisitions with the COVID-19 pandemic. So the expected surge in distressed mergers and acquisitions did not happen as many predicted. This is because we're facing a tough economic period with UK businesses dealing with supply chain issues, not enough workers, high inflation, general poor trading conditions. UK's insolvencies went up by 14% in the year to December 23 compared to the year before. Administrations increased by 20%, reaching their highest level since 2019. So that means that over 5% of UK firms are basically zombie companies that are unable to pay their debt interest. A lot of the distressed mergers and acquisitions activity came from too much debt and failed refinancing, making up over 40% of cases. So retail, consumer goods, leisure and construction saw the most deals in special situations. However, the expected boom in UK real estate distressed deals in 21-22 didn't happen. In 23, with less money was put into these investments, partly because of high debt costs, increased interest rates post Liz Truss crashing the economy, and better options like bonds. Well, why wouldn't you put money into bonds if it's more secure and gives you a better return and less risk? So there's an £8 billion funding gap for UK loans needing refinancing in 2024. And you look at something like Cerberus Capital Management's US $3 billion global distressed real estate fund in quarter four 23 showed some optimism, but in early 24 sees the UK distressed asset market remaining quiet, with investors being careful and waiting. So this difficult situation requires smart methods to find value in distressed companies and assets. To succeed in this complex market, thorough analysis, expert advice, and understanding the financial and regulatory environment are crucial. So distressed acquisitions are a special part of mergers and acquisitions. They offer a way to realise value in tough financial times. So operating in these conditions needs a careful balance of caution and strategy. In the UK, distressed mergers and acquisition deals involves a detailed process. This is due to factors like company insolvency, how and when the deal happens, and protecting creditors and stakeholders. Companies within a distressed company structure must think about solvency when setting values. They must also plan how to encourage management to attract investments. So when a company is in trouble, directors have to focus on what's best for the creditors, not just the shareholders. They must follow the UK Companies Act 2006 closely. This helps them avoid personal and criminal risks. Recent trends in the UK show more companies are being bought because they're in trouble. This is due to higher energy costs and inflation causing recessions. Buyers looking to reshape companies or sell parts that aren't central to their businesses are keen. Meanwhile, investors with lots of money are expected to buy more, looking for good deals. Industries like retail, manufacturing and transportation are expected to see more of these deals. Financial services, healthcare and technology may also see continued activity. Lenders may face more battles to give out good loans, leading to more restructuring and refinancing deals. The UK has specific laws for these kinds of mergers and acquisitions deals, like the Enterprise Act 2002 and the National Security and Investment Act 2021. Directors have to be careful with these laws to avoid being blamed for wrongful or fraudulent trading. So the UK market trends impacting distressed acquisitions. In terms of distressed acquisitions, it's critical to grasp the UK market trends. The expected rise in distressed deals didn't happen in 21-22, as we mentioned, though some sectors had cheaper assets. So the hunt for distressed assets is less fierce due to high loan costs and better return on bonds. Yes, this is clear. In quarter 4 23, the UK saw a 25.9% leap in businesses hitting financial trouble, and by early 2024, over 47,000 firms were close to folding. Construction and real estate are the hardest hit, making up almost a third of these struggling businesses. So by 2024, the UK will see an £8 billion shortfall in loan financing and refinancing. This is huge, suggesting many firms may not get the loans they need to survive. So asset sale prices are now dropping below what buyers originally paid. Red flag alerts data shows all sectors suffering from financial woes. The construction sector's trouble spiked by 32.6%. Sectors like professional services, retail, health and education and IT also felt the squeeze. So the UK regulatory changes call for detailed plans from buyers and investors. Laws like the NSI Act and bodies like the CMA and FCA shape deal-making with foreign countries. These rules stress the need for a smart approach to make the most of distressed assets, given the changing UK market. So just bringing this to a close, what essentially we see as an opportunity to acquire distressed property, because you can buy it at below market value, so that's at a discount. You get the opportunity to add value using refurbishment and also permitted development rights. So this can apply to both commercial and residential property. You can choose an area of high rental demand, i.e. to get high cash flow, and you can take the opportunity to refinance after completion of refurbishment and get all or most of your money out. So you need to be ready with your finance and funding. So this can be cash or funds of your own or investors. It could be a bridging loan. It could be specific one-off loans to refurbish and refinance to a new purpose. But essentially the thing is to be ready with funding in order to pick up these distressed assets. So that's the opportunity that we have right now. If you'd like to know any more about distressed properties and why distressed properties could be your best bet, then call me, that's Alan at Alpus Group, on 07539 141257 or 07539 or +44 7539 141257 from outside the UK. It's 0333 224 1257 or +44 333 224 1257 from outside the UK. You can get me on calendly.com/AlanJE, book an appointment, or you can simply drop an email to alan@alpusgroup.com. Cheers for now.